Let me start with a riddle. I was born in 1983 in one country. 7 years later, when I was exactly 7 years old, my country became another entity. And in 2014, when I was 30, it became a third country. If you guessed Crimea, you'd be correct. My name is Yael Tamar, and I'm 37 years old. My earliest memories at the age of 4 are standing in a very, very long line with my grandparents to buy butter. When I was 7, I remember buying ice cream after school, and the currency I was using had 7 or 8 zeros on it. At the end of the day, we'd take the bills and then scratch out these extra zeros just to know how much our money was worth. And let me tell you, even at the ripe age of 7, I knew that that currency was worthless. When I was 16, I moved by myself to the US, to a small town in South Carolina to attend high school. You can probably imagine the cultural dissonance I was experiencing. What that transition taught me is that the Western economic system is far healthier than the extremely centralized banking system of the former Soviet Union that I had grown up in. Yet, even Western capitalism is bound by its centralized financial system. As I grew and gained employment experience, first in the real estate space and then in the financial technology, I couldn't help but wonder, what's next? And so here I am at the ripe age of 37, a mother of two great kids, and a co CEO of an amazing startup, Solid Block. And I believe that a better, more democratic financial model that we should be pursuing is, in fact, ahead of us. The early 2000s introduced shared economic models led by advent of Facebook, the founding of companies like Uber, and the creation of cryptocurrencies like Bitcoin and Ethereum. Yet, even the PayPal model of transferring money almost instantaneously by necessity uses the banking system where the money that I send to you is electronically transferred between two, maybe even three banks before it reaches your account. Institutional finance has its hurdles. And don't get me started on all the paperwork and legal requirements involved in requesting a bank loan. Let me draw on an example of how the current central financial system favors big business by focusing on how Wall Street recently witnessed an uprising by amateur investors who caused big institutions to lose a lot of money. Yes, you guessed it. I'm talking about GameStop. GameStop is the world's largest retail gaming company. But because many video games have been digitized and the pandemic kept people at home, their physical shops, the basis of their business, weren't doing very well. So, a year ago, GameStop shares reached a low of just $3. At this point, trying to make money, some Wall Street hedge funds shorted the GameStop stock. That means that they bet on it dropping even lower. They sold it low and hoped it would drop lower so they could then buy it back at a profit. There is a risk involved in shorting a stock because it is entirely possible that between selling and buying, the stock becomes more valuable. And that's what happened when a group of game lovers banded together on the Reddit community platform to prop up the GameStop stock, buying it while it was low and raising its value. That meant that the hedge funds who had sold low lost money on their bet and that the stocks would plummet. Meanwhile, the Reddit community users were using a platform called Robinhood to buy GameStop shares. Suddenly, Robinhood banned the trading of those shares. This caused outrage among the amateur investors that Robinhood was trying to protect the hedge funds. But in reality, Robinhood was bound by real-time settlement, liquidity issues, and had to borrow money to cover the large amount of trading on their platform. What is clear from this example is that the average individual is primed to take control of his or her own finances. It also shows that though technology exists to streamline the buying and selling of stocks, it has not yet been incorporated into the way we do business. So, how do we decentralize this very centralized system? How do we establish a more immediate relationship between an individual and her assets? And how do we make you and you and you your own private investment bank? What I envision for this new economic reality is a decentralized financial system where individuals are the sole custodians of their assets. I want to use the latest technology to ensure a compliant, decentralized, and permissionless marketplace. What makes this vision possible is the advanced technology called blockchain. And the bridge to this new model is real estate. Numbers could be numbing, but if I tell you that real estate is a $317 trillion industry, yet only $10 trillion is genuinely available for investment, you're going to ask me, what happened to the other 300 trillion? Well, most of it is held privately or via public securities. It is tied up in loans and deals, sometimes for up to 10 years without individual investors being able to trade or liquidate their investment. Other people, other institutions make those decisions. Now, imagine if, as an investor, you could buy not a whole building, not even a whole floor, not even a whole apartment, but a fraction of a building, let's say a few square feet, with very little fanfare or paperwork, that you could liquidate your holdings anytime you wanted, and that your transaction would be secure, transparent, and compliant with all your country's regulations. You'd want in, wouldn't you? And there is no catch. Using innovative technology like blockchain can change the way things are traditionally done. A blockchain is a digital record of transactions. It's a ledger. The name comes from its structure. The structure is such that individual records called blocks are linked together in a single list called a chain. Blockchain is used for recording transactions made with cryptocurrencies such as Bitcoin and has many other applications. This market, the digital securities market, is relatively small. But I'm convinced that when we digitize real estate, when we sell it in fractions and create electronic tokens from those fractions that can be bought and sold with impunity, we will enhance accessibility, will lower transaction costs, will create new financial products, make settlements faster, enhance liquidity, and give people opportunity to rise up, build, create, and preserve wealth. And that's what we do at Solidblock, the company I co-founded. What can you do to encourage the progress of a decentralized financial system? Well, first, look to the large corporations that are already heavily investing in blockchain technology. MasterCard, Tesla, PayPal, JP Morgan are just some big companies and banks that have taken tokenization into the mainstream. I would venture to say that a combination of huge consumer popularity, and the fear of missing out is what is compelling them to do so. In addition, the reputational risk of working on the blockchain has been significantly reduced over time. Applying blockchain to their investments gives these institutions a tool to invest in assets early, to support these assets, and to shepherd them to secondary markets, where they will be more democratically available. Second, and this is the more personal part of the challenge, you can invest in a digital asset today on Solid Block and many other platforms. Start slow, start small, be courageous, learn what it means to be your own investment bank. We, as a society, are positioned on the edge of a revolution that is leading towards a decentralized financial system. We can close our eyes and hold tight to the traditional way things are done, or we can step forward open-eyed and excited into the future of finance and never look back. Thank you.